Good morning everyone and welcome to my daily report market analysis videos with me, Richard Perry, market analyst at Hantec. On Friday the 28th of February, the massive sell-off that we're seeing through equity markets and anything of any sort of risk persuasion really is continuing. We've seen that the S&P 500 was over 4% lower yesterday. The huge selling pressure into the close. We're breaching support after support on these indices now. Into the European session, we've got futures on Wall Street over 2% lower, and that has translated to 4.5%, 5% down on these European markets. The selling pressure is enormous, not stopping yet, and I'll talk you through the daily, the technicals on the DAX in a bit, but as my chart of the day. But certainly these equity markets are under significant pressure. Now it's interesting that we're seeing some odd moves going through not only Forex but also the commodities prices. Gold is down. Why is gold down at the moment, despite the fact this is such a significant amount of market risk fear? Well, there are suggestions that there are margin calls through portfolios that subsequently mean that liquidation of gold assets is also coming as they're having to pay for those margin calls. So that is impacting on the gold price. Interestingly as well, we're seeing the dollar also being sold off. That dollar coming down as expectations of rate cuts are coming significantly forward. Having been just about a week ago, expectation of rate cuts from the Federal Reserve were pretty much zero. Now they are fully priced in for the March meeting. So the dollar has been significantly sold off as a result of that. Now, how far that dollar sell-off goes, I'm not convinced it's going to continue for too long. I mean, it could continue a long way. However, I don't think that in terms of time-wise it's going to continue long, because I think ultimately the market will see that the dollar is still a safe haven play in this sort of market that's going on at the moment. So at the moment we're seeing significant moves running through markets, and to be honest, they're not stopping, even though there is this element that markets are oversold and at extreme levels, but the rebound, or the technical rebounds, not quite coming through yet, although a couple of signals I've noticed through the Dow, but nothing yet of any real note. Volatility, let's talk about that. Volatility, the highest on the VIX since 2018, so 2-year highs on that volatility index level. And oil price, wow, oil price just falls on just a repeated daily basis, 4%, and again down today on WTI and Brent crude. And we're seeing 42.35 as the next key level on that oil price on WTI, and that looks like it's going to be seen as well. So huge runs lower there. Now, okay, so in terms of data points today, if it means anything, we've got some economic data this afternoon on inflation. We've got the German HICP, which is released throughout the morning, but you get the country-wide data this afternoon, and that is expected to see German inflation just picking up, actually staying flat on the HICP at 1.6, and expected to also then look at the core PCE, which is the Fed's preferred inflation level, and that's expected to pick up slightly to 1.7%. Also looking for the final reading of Michigan sentiment, which is expected to be maintained at 100.9. But obviously, while that comes into realms of possible downside revision from the flash reading, because obviously what we've seen in the past week or so is huge elevation of market fear. So could that now start to fall back? That would be an interesting indicator this afternoon to watch out for. Okay, so let's go on to my chart of the day, which is the plummeting DAX. Wow, what a sell-off that we have seen in equities. Again, another crucial support that has been broken, 11,880. Now, if I zoom out here, you can see that has been a massive pivot level for years on the DAX. And I say that years, back to 2017, it's been a pivot area. 11,880, and breaching that to the downside. If it continues to remain underneath that, well, it's already broken that uptrend channel. I mean, I think we can safely say that we're no longer in any sort of a bull market. And it seems as though that breaching and closing below that 11,880 level would open 11,265, which is the August low. And that is the next key support on the agenda. But look at this, RSI 19. Let me show you how the Bollinger Bands on the DAX have been moving. And they are now significantly, the DAX is significantly now trading at below, actually, sorry, shrink that down so you can see the whole chart, significantly trading below the Bollinger Bands. So extreme levels of selling pressure we are seeing on the DAX, but as yet, nothing really in terms of recovery, although we have picked up off the low at over 100 ticks, 120 ticks actually off the low now, 11,725 area. But is this a rally that we're really expected to take hold yet? I just don't see it at the moment. Market's a massive selling pressure. Another massive gap lower today. But yeah, 11,880 initial resistance now. So is that going to start to build underneath there? The old trend channel, that resistance sits at 12,140. The gap down from 12 to 11. Dear me, oh dear. Okay, well, I wish you good luck in your trading today, and I will say good luck in any way you have it. But you can subscribe to our analysis videos on YouTube and also go to our website to sign up for our trading webinars. Thank you.